Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
So negative bias is what we're seeing coming in for most of the Asian markets.
Banking industry will support the growth of the economy.
You know, base metals and their equity derivatives have done well. Things like copper, silver, gold, they're 0.13 odd lower on the Nifty Bank. The sensex is down 0.14.
But 2025 has been quite the opposite. It's the headlines that have driven the market.
Philosophy within the company as well as within the group is that you have to fill your own group.
Tight, narrow, insipid sort of range with a lot of stocks moving in big directions but with limited volumes.
Credit rating in the likes of around AAA will actually bring down the cost of funds almost by 100 basis points for the company.
The street is just beginning to warm up when it comes to these names, and of course the much talked about Lenskart has the most number of analyst recommendations so far.
The work from the regulators end as far as formulating this draft consultation paper or the draft regulations on regulating commissions has already begun.
And Vivek, it continues to be a range-bound trading session. It is also the monthly expiry, the last expiry for the year.
Okay, well, that is the day so far. Markets, as I said, treading water, not very much by way of action, one way or the other. This is Closing Bell. We are coming to you from the CNBC-TV18 Motilal Oswal studios. And I think Surabhi is with me. Surabhi, hi, afternoon. The one area where there is enough and more action is metals. The metals index is essentially up about, it's the top gainer on the Nifty or across sectoral indices. And interestingly, it's at yesterday's high point. I wasn't there yesterday, but I checked, there was a big red candle. The metals index sold off very sharply yesterday.
A lot of volatility.
Yeah, so it was a big candle. And today, as we speak now, we are at yesterday's highest point. So, I mean, failure to take that out and kind of, one more sell-off from here, I mean, it'll become significant if one of those two things happen, which we will find out over the next 60 minutes.
Absolutely. So, indeed, it's been the metal story throughout last couple of sessions. It's the only active part of the market where you're still seeing some trades one way or the other. And yesterday was a day of volatility. A lot of the stocks started with 10% gains, then they kind of, flickered through the day and then ended lower. Today is a reversal playing out. You started slow and then momentum has been building back up in. But otherwise, it continues to be a fairly lackluster session. We don't have much of a directional bias. The Nifty, for what it's worth, it's recovered from the low because yesterday the difference in trade was that there was no buying at all coming in at lower levels. And therefore, we lost 26,000. Today, for what it's worth, at least from the lows, the market has managed to recover a little bit. So I think, we're none the wiser, Prashant, but the range is intact. And there's no decisive move, despite the lower volumes, at least no decisive move on either sides, either borders of the range, at least so far.
Still below the 20-day, though. I mean, I think that broke yesterday.
That happened yesterday, yeah.
And we're trading just under it. So, we've had moves through the course of the day. It's not been completely sedate, but ultimately, you got about 25 points to show for all of it, what's happened over the last few trading sessions. So, metals is one space. The PSU Bank index is up 1.5%. That's the other. And the auto index is the last one. So, I mean, if you just look at it, these are the three sectors in that sense, which are also, by the way, outperformers for the year. The metals index for the year is up 28%. The PSU Bank index is up 28%. And the auto index is up 23%. So you're kind of sort of finishing with gains on the three sectors, which are the big winners for 2025 as well. So that's interesting. Let me just quickly tell you what's lined up here on over the next 60 minutes in Closing Bell. So volatile moves and without very much to show for it at this stage. So under the 20-day, sub to 26,000. Small caps under pressure, mixed action across sectors. As I said, metals, autos, PSUs are up. Real estate, pharma counters are dragging. This is the seventh straight session of losses for Dixon. It's recovered from the day's low, but it's down about 0.75%. We'll have, we'll talk more about this one in just a bit. Eternal is the other one. Shares are under some pressure. The CFO has resigned reports that he's set to join Flipkart. Now, we'll have more details on that as well. And commodities, as I said, what's happening, rewind in that sense of what's happened in 2025, but maybe we'll also try and look ahead. We had a metals analyst in the morning who said he's most bullish on, aluminum as a commodity in base metals. So that continues to be a topic which we will discuss here. So that's where we're at. Some air traffic data coming through, and I guess November numbers usually, it's not poured over too much, but since that entire Indigo fiasco happened, maybe this will attract a bit more in terms of attention, but those numbers are just coming in right now.
I think the bulk of that fiasco, the 3-day disruption, it really played out in December, the early part of December. I think it was December 3, 4, 5, if I'm not mistaken, or 2, 3, 4. So maybe that is when the skew will really show up. Right now, what we're seeing is Akasa lose a little bit of market share. Air India's gained. And the other numbers coming up on your screen. Before we get to Mitesh, there's one more stock I want to highlight, which is very interesting, and that is Indocount. Look at what's happening to Indocount. 18% up move on Indocount. Talk about a brokerage report being noted in the market. Also, maybe for lack of other news flow triggers or information. This was a call that came in from Vendis. So I just wanted to highlight that, and we put this out in the morning itself. And their call was around 348 on the stock. They're quite positive on the overall home textile space, and this is one stock they had singled out, and it seems that it's found plenty of attention in the market today. We'll get you more on that call as well, and what the fundamental reasons that went behind it. But for the time being, as always, let's start off with the technicals. We've got Mitesh Thakkar joining in with some ideas for the last hour. Mitesh, good afternoon. So, second last trading session, and we have the expiry upon us as well. How are you going about it for the last hour?
I think, the index went down and then recovered nicely. So, again, the index is not giving any trading opportunity. I think the key is that the bank nifty, I think, in the last about 6-7 sessions has managed to hold about this 58, 800, 850 zones and is bouncing back from there. But if bank nifty breaks, and we have some negative spreads over here, bill spreads. But if bank nifty was to break below this 58, 800, then I think, we could at least get a directional cue in the bank nifty, which could in turn influence the nifty as well. But for the time being, I think both the indices are contracting. On the stock side, you were talking about metals. I have JSL as a buy call. Keep a stop at about 816 over here, and look for a target of around 855. And Jindal Steel. So the other one is also a metal stock, steel, ferrous name. Jindal Steel is a buy as well. Keep a stop at about 1004 and target of around 1065 can be looked at.
Mitesh, before we let you go, I just wanted a specific technical check on Eternal. Eternal has faced a lot of pressure throughout the last 3-4 weeks. In this month, it's down about 7.5%. And Eternal has fallen quite a bit from the peak as well. It had touched levels of 300 around. And from those levels, it's already dropped about 25%. So any advice for people? There's a lot of fundamental news flow. But what should someone be doing if they have a positional hold on this?
See, to me, I think, Eternal has corrected significantly and now, is on slightly oversold levels. But again, there's no trend, there's no sight of a trend starting. So I think around this 274 to about 265 is a good support zone. It could give you a bounce back at least to about levels of 295 to about 300 on the upside. And that should be the exit point, because as of now, I don't have a signal that we'll go beyond that.
The high was in October, 368, 368. Basically given up $100 from the highs for Eternal. And we've been telling you how, all companies are cash ready, cash rich, and looking to regain share, increase share in the case of Eternal. Companies like Swiggy maybe too. So there's going to be enough discounting and price wars and things like that as we get into 2026. So that is what the market is worried about generally across the QSR space. The Secretary of the Department of Financial Services, Mr. M. Nagaraju, told our colleague Sapna Das that IRDAI is set to come out with draft regulations on insurance commissions. Remember, the big surprise in the Insurance Amendment Bill, which was cleared earlier this month, was an enabling provision for the regulator, IRDAI, to be able to regulate commissions. So this is taking that forward. It's a story which we here at CNBC-TV18 have also reported on over the last many months, and looks like this is now on the government's radar too. Just want to play out a quick soundbite of what the Secretary said.
The government is very keen to have to empower IRDA to have the oversight and also the authority to implement on the distribution costs, and also the power to regulate so that nobody is paying too much commissions. Because the complaint has been that some of the insurance companies too high costs, the agent commissions, and consequently the premiums are either premiums goes up or the ICR, increment capital ratio, is very low. So in both cases, the consumers will actually suffer. So we wanted to give oversight legal power to the IRDA. So the government has given to that.
So there'll be certain rules and regulations that the regulator will be coming up
Yes.
on this front particularly?
IRDA is expected to come out with draft regulations.
Okay, there's more to it. You can catch that entire thing online, but very clearly, I mean, the government making it clear that this is something which they are worried about and are looking at. Yash has been, of course, as I said, we've been reporting on the story in terms of the going-ons here, and now we've heard it from the DFS secretary himself. Yash, what else are you picking up?
Well, Prashant, the DFS Secretary M. Nagaraju has cued the insurance industry to a very important development, and that would be draft regulations when it comes from the regulator IRDAI on regulating commissions. What we've been given to understand from our sources, further than what the DFS Secretary said, is that work as far as those draft regulations on insurance commissions are concerned, that work has already begun at the doorstep of insurance regulator IRDAI. IRDAI has been asking life insurance as well as general insurance companies, to provide data when it comes to segmental commissions which they pay, which means how much do companies pay individually in the motor portfolio, in the health portfolio, in other portfolios like cyber, so on and so forth. What we've been given to understand is that the insurance regulator particularly is concerned about two segments. One is motor own damage, and the second one is health insurance, where it feels that the commissions are excessively high at certain places. And of course, as the DFS Secretary M. Nagaraju also said, the important cue and the interesting development now from here on would be the draft consultation paper that is expected from the insurance regulator on regulating commissions. We've written to IRDAI on this particular development. A response from the regulator is still awaited.
Okay, Yash, thank you very much for that. So that is the commission story, which is the government's focused on, and IRDA now is going to come up with a consultation paper, as Yash is telling us. Gurmeet Chadha is with us, Managing Partner and CIO, Complete Circle. Gurmeet, good to have you with us here. Season's greetings. Thank you for joining us. Just a quick word, Gurmeet, if you heard Yash and the DFS Secretary himself, I think this is the first time we're hearing someone that senior in the government really clearly talking about this issue, which so far has been, talked about in insurance circles, and of course we've reported on it over the last many months. What do you make of it? And from a stock perspective, where do you see impact coming through?
Season's greetings to everyone, Prashant. I think, it was long overdue. And I think even in health, for larger brokers, the commission varies like 30-40%, especially the tier 2 service providers. Auto has been on very high. And that obviously is concerning. Such high commission structure is unsustainable. Also is very client unfriendly. So there will be a transient impact on insurance brokers, also on companies as large brokers will bargain their share of pie. But digital channels, digital networks like PB Fintech eventually will gain because they've been investing heavily in post-service, as well as there is a loan digital marketplace. And, there are other segments they are operating on. In fact, in online insurance now, their market share is almost 90%. And the share of online, once commission drop, continue to pick up. We've seen that with MF distribution. Prashant, if you see the new SIPs registered last month in November, 45% actually got registered on Grow platform. And if you add online platforms in new SIP registration, that's almost 60-65%. So I think the business is moving digital, more D2C, less intermediary commission, more scale. So eventually it will benefit, but there will be a 1 quarter, 2 quarter impact. Also would want to see what is the renewal commissions, because a lot of the business is also on renewal. And a lot of this business is annuity, because these are compulsory and has to be renewed. So there's already talks of taking 2-3 year front loaded premiums by a lot of providers. So if you're paying a health insurance, pay for 2-3 years upfront. Let's see how much that cushions, but there will be a transient impact. So any correction actually could be an opportunity.
Okay, so that's as far as the insurance space is concerned. Gurmeet, hi, good afternoon. Good to have you in today as we're counting down to the close of 25. And what a year it's been, right? Who would have thought that metal stocks will give you a return of 50, 60, in some cases more, in like a month or 2 months flat?
Yeah.
So I don't know if this is anything beyond just a very smart trade. And even if it is, I mean, will it continue? What do you do? Because if you've just held on to your portfolios anyway, most of the people have felt a little disappointed with this year. And then you've seen one month stocks going up 50, 60%. And then there's FOMO and then there's disappointment. So how do you balance all of it? And what's the view on metals?
So two things. First, metals, there are no cash flow in a metal. The price is purely demand supply. And if, at probably 60, 70,000 in silver, there was hardly any supply. So at 2.5, 2.3 lakh kind of a prices, there'll be supply as well as even the silver, recycling waste, etc. Everything comes into play. So you have to be mindful. It can drop 10, 15% also in a day. So I think fresh exposure, maybe at these levels is slightly, in my view, avoidable. Maybe if you can get more dips on any peace deal or any risk-off event or any sharp moves like this, maybe you should build. But I'm of the opinion that in next 2-3 years, there should be about 10% exposure to precious metals. Clearly, from point of view of geopolitical uncertainty, trades being used, as negotiation tools. So that should be there. On metal companies, I think probably you can be tactical. Maybe the next quarter earnings will be pretty good. The market is rewarding good earnings and good cash flows. So maybe from a tactical point of view, especially in non-ferrous, you can take some exposure, but be quick to book profits. We saw that with refiners last quarter, very good profit as the the gross margins went up, the diesel cracks improved, and the likes of Chennai Petroleum and a lot of refiners actually did well. So play that tactical game, but fresh exposures on metals, I think buying on dip is better.
Dixon is coming your way next, Gurmeet. Let me just quickly get in Hormuz in for some perspective on how much it's fallen and the view out there in the street as well from analysts. Hormuz, take it away.
It's been a very forgettable year for Dixon, and it's down for the 7th straight day today, mind you, and also for the fact that the 52-week high, which was close to 19,000 rupees, the stock has corrected almost 40% from those levels. Now, if you take a look at the annualized returns as well, for the year so far, the stock is down 34%, and this is only the third instance since its listing that the stock has delivered negative returns on an annual basis. The last time it did so was back in 2022 when it was down around about 30-odd%. But since then, the stock had doubled in 2021. The stock was up close to 70% in 2023 and had almost tripled in value in 2024 as well. Now, what is so significant about this fall that in the month of December itself, the stock is down around 19-odd%, and this has made it the worst month that the stock has had since January of 2023. Now, compare that to last year when the stock was up almost 170%. The stock had gained in 11 out of the last 12 months. Now, if you take a look at the month of December itself, not just the month of December, but the preceding 4 months as well, the stock has delivered negative returns. So it's 5 straight months of losses that Dixon Technologies has delivered. Never before in its trading history had the stock had declined for 5 months in a row. Now, earlier this morning, CLSA came out with a note on the stock. It cut its price target to 15,800 from 18,800 earlier, and it said that it is cutting its estimates because of 2 key reasons. One, because the smartphone sales in India are tapering off, and B, its key clients are losing market share. For the third quarter, it's expecting Dixon's revenue to remain flat but decline on a sequential basis, and if that happens, it might just pave the way for the company to cut its full year guidance for FY26. Now, they also say that although the short term appears cloudy, they remain constructive on the medium term outlook, and hence they have maintained their outperformance rating. But from the current market price where Dixon currently is, only 3 brokerages have targets lower than that. One is Morgan Stanley, the other being Goldman Sachs, and the other being Philips Securities, whose price target is as low as 9,000 rupees for Dixon. But despite that, most of the street still continues to remain optimistic on the stock. 27 analysts still have a buy rating, and the consensus estimates of price target still implies an upside potential of anywhere close to 50% for the stock, courtesy of the fall that it has had.
Almost, thanks very much for that. Gurmeet, any thoughts on Dixon here?
I'll be actually looking for opportunities, Prashant. In fact, we've increased our interaction and site visits in some of the EMS names. I think Dixon is now 45 times, not cheap, but that's the problem of this high growth segment. You're priced to perfection, and any miss, any softness. And I think the second point, which your colleague made on some of the vendors losing market share, I think that's a bigger concern. But I think it continues to diversify. Mobile contributed a larger segment. Now it's getting into different territories. We are also keen on looking at gains. There have been some disclosure governance issues raised by a few brokerages. I think if they can come clean over the next quarter, improve disclosures, because the OSAT and PCB can materially add to its top line and margins. So this is one player which is more like a B2B2C, because their segments are more industrials, aerospace, auto, etc. And with OSAT, which is semiconductors and PCBs coming, that's a very, again, high growth area. And with the backward and vertical integration, the margin should also improve. So we are looking at these two pockets, especially these two names, in case we can add on dips. Maybe Dixon maybe now, and gains maybe with some lag.
Look at what I was looking at. You mentioned OSAT and PCB, etc. CG Power, it's come off sharply. 875 was the high on CG Power. It's one of the among the first 4 companies to have gotten the approval for OSAT, PLI for OSAT. So there was Keynes, there was CG, there was Tata, and there was, I think, one more. And 643 at the highs it had hit, I think almost hit about 1,05,000 odd crores on market cap. This one also has come off very sharply. We were talking about Indocount, which is surging. Now, it's not a broader textile move. It is a very stock-specific move, and this is on the back of that call from Avendus. Vinny's walked in here, and she's going to tell us what Avendus is saying on Indocount. Vinny, take it away.
Hi, good afternoon. So yes, Indocount, they've initiated coverage. Avendus has initiated coverage on Indocount. Buy rating, target price of 348 rupees per share. Obviously, there are a lot of macro developments that will happen. We are waiting for the tariff deal with US. Once that normalizes, that will be a key positive for them. But what is doing well? There are a lot of FTAs that are signed, right? So the progress over there is positive. Though Indocount has a lot of exposure to US, but they are diversifying on that front as well. What Avendus is also highlighting, one is obviously they believe that the company is positioned very well to benefit the minute that US-India trade deal actually comes in. Near term, they believe there will be some challenges, there will be some inflationary pressures that one could see, but long-term story, mid-term growth story for Indocount is very positive. UK trade deal and FTA is a big positive for them. Exposure to large suppliers, B2B suppliers, is also very good for the company. So that is a key positive. And on the back of that, they believe that Indocount could actually grow in the range of around 13% over the next 3 years, CAGR growth, EBITDA growth of 31% as well. So they're very positive in terms of the growth story for the company versus other home textile players. And they believe despite that exposure to the US, the company has managed to see good growth, right? Their core business has been growing well despite US not doing well for them, or even other home textile players. And the demand for US has seen a reduction, but other countries is seeing an increase, and Indocount is managing to see that growth in those other countries as well.
Okay, all right. And that explains the excitement around Indocount. That report from Avendus perhaps has been.
The other textile name, right? So we look at Gokul's exports,
yeah,
which is the India-US trade deal indicator.
What is it flashing now?
There's no deal. I mean, I was just looking. It's crazy. It's 7. And people have been doing this, I guess, I reckon for some time. Buy at about 700, 750, and sell when it comes to about 900, 950. Just look at it, right? I mean, typically follows that pattern. It's basically almost back at the lows. I mean, the absolute low was in August at about 681 or so. So you're still about 50, 60 rupees away. But otherwise, not looking good here. About 2.5% lower. Broadly, Gurmeet, any thoughts on this entire space?
So Prashant, Indocount is more bed linen and fashion bedding, right? Gokuldas is largely garment
apparel. Yeah.
Yeah. So, as I said, it's more speculative. And you're right, maybe a lot of people are trading in it at lower band and exiting. We have Gokuldas in our portfolio. We entered at much lower levels 3 years back when the turnaround happened. So that's a bit of a contra play. But I don't think this is a market where you should bet too much on the trade deal. Better off in being pockets where there is earning support. I think the earnings are not going to be great. And our feedback in terms of, we've spoken to a lot of Delhi-based, NCR-based, apparel exporters and people in textile. We spoke to Welspun, etc. It's not looking that great as of now. So once maybe the EU FTA happens, maybe one of the tranches with the US, maybe that's the time to get in. Not a good time to do that right now, in my view, personally.
Okay. All right, Gurmeet, we will wrap it up on that note then for today. Thank you so much for joining in. And I don't think we're talking again in this year, unless you join us tomorrow. So we'll keep that window open. But otherwise, wish you a fabulous end to 2025 and an even better, healthy and happy 2026. Catch you again soon.
Same to you. Same to you.
Thank you. All right, we'll take a quick break on that note. Come back on the other side and we'll have more coming up on the markets. Rajesh Kothari of Alf Accurate Advisors will join in with some thoughts. Welcome back. Well, as we see the screen, nothing changing at all. The Nifty is absolutely flat. But that buying has ensured that at least it stays around the flat line. It's not looking at the kind of losses that we had in the earlier part of the session. Let's continue the conversation and, as promised, bring in Rajesh Kothari of Alf Accurate Advisors. Rajesh, thanks for joining in. So tell us, stepping into 2026, do you have new ideas in mind? I mean, we've spent the better part of the year talking about a lot of the capital goods plays. We've spoken about some of the, the energy sector companies that you like. But tell us, what thoughts as we step into a new year? Rajesh, I think you're on mute.
Yeah. So I think good thing is very likely in our view that 2026 is likely to be a year of positive surprises. Because after a very long time, we are seeing the improvement in credit growth. We are seeing improvement in consumption. CapEx anyway is doing well. And generally, when you have a trinity of CapEx, consumption, and credit growth, that results into the stronger corporate earnings growth. And hence, even if you look at from the valuation perspective, the ownership perspective, the underperformance of India versus MSCI emerging market. So I think the picture is perfect and keeping fingers crossed, but 2026 should be a good year for, equities in general.
A good year, Rajesh, right? Afternoon. Better, definitely better than 25.
Yeah.
How is just give us a broad sense. I mean, I think it's a good idea to reflect on 25 first before we look into 26. I mean, if you were given a chance to replay 25 again, is there anything you would do and something that you would not do?
Oh, I think it's better not to rewind 2025. You have seen the 4 geopolitical war and 1 tariff war, am I right? So it's better that 2025 goes as a forget kind of a year. It's not a great year for entire world. For citizens, for geopolitics, for economics, for interest rates, for RBI. I mean, there are a lot of things, am I right? So I think it was overall not a that great year from the macro perspective.
But Rajesh, market-wise, it's been a very good year. Look at the Nasdaq, look at Korea, look at Europe. European banks are up 90%. I mean, it's another matter they're another 70% away from all-time highs. But actually, across the world. And I was thinking that I was looking at doing this rewind exercise. I thought US would be top of the list, but there are so many markets which have done better than the 20% that US indices have done, in 2025. So, sorry, go on.
And I think, that was on a lighter note what I was saying. So clearly, when you look at the 2025, as I said, there are a number of events. It was an eventful year, right? Generally, in one year, you have not seen so many events. 4 events happening in last 12 months. Donald Trump taking a U-turn. And please remember, when you look at the Europe market versus India, Donald Trump kept changing the stance on India almost every day after July. Correct? And that was definitely worked kind of what I would say, a little bit against the Indian economy and even for the Indian equity markets. Whereas when you look at it from the Europe perspective, that is not the case. So, and Europe has massively underperformed earlier. And then even if a small delta, that results into the very big swings in the corporate profit growth in Europe. And US, on the other hand, the economy still is resilient despite a lot of tariff thing. And clearly it is an AI trade, so US has to do well. So I'm seeing from that perspective. I think 2026.
Got it, Rajesh. To my question, in your portfolio-wise, something you wish you had done and something you would wish you had not done. It's purely from your portfolio perspective.
Well, I wish I would have zero IT stocks in the beginning of 2025. Of course, we reduced the weightage in March, April. But I wish I would have zero IT stocks. So that's, I think, the one thing.
Was there anything you knew enough to do? I mean, knew enough to buy something which you did not, which kind of was a miss?
No, I think it is always years of. So we do, what I say, the regret analysis, right? The opportunity miss. But I think the biggest thing is first you need to come out from the stocks which are not moving, right? So, for example, IT, which went down 25-30%. Which at the opening of the year, it was looking like a great story because Donald Trump came in US and everybody was hopeful on the IT spending to go up. And then, of course, it didn't perform. And when something else performs, because flow moves out from the one sector to other sector, correct? So it is not a, one-leg story. There are always, the one sell and second buy in lieu of it. So I think, but it's okay. It's a part of life.
But Rajesh, speaking about IT, as the year ended, the Coforge deal is also telling us that Indian IT companies are also trying their best to do what they can to get on the AI bandwagon, right? What did you think of this? I don't know if you have any interest in Coforge or not, but here's a company that's going the acquisition way, whereas the larger, IT services companies are trying to build AI ground up and embed it in all of their existing offerings. They're not looking at, M&A as a strategy, perhaps not right now. Your thoughts?
I think, please put a disclaimer because we own Coforge from last few years and it is, I think, the best performing IT company in terms of the revenue growth, profit growth, and as well as in terms of the market cap growth. Probably, if you remember last time, 6 months back, they made some investment data center and one contract.
And the market really punished them for it,
Market punish. And then, of course, everything recovered because that's what I said, you cannot punish the company which is actually doing things ahead of its time. And that's what actually as an investor, what we want from companies, IT companies who are sitting on huge cash pile, to use that cash effectively, correct? The capital allocation policy, it gives you enough room to do such M&A, to do something out of box, to make sure that you remain relevant 5 years down the line. Forget next 4 quarters. And I think Coforge clearly I think they are doing the right things. They are filling up all the gaps, which can further complement, their overall strategy, which can increase their market size, by both organic and inorganic means. It will also lead to deeper reach and deeper penetration into the new capabilities, which probably Coforge is probably not too strong in many of them. So I think it is in my view, it is a win-win deal for the long-term investors. Clearly, for 1 or 2 quarters, I don't know, does it dilute EPS and EPS to what extent? Those concerns may remain in the short term. But I think it's a really good long-term story. From 4 years back also, when we took Coforge, we had that view that, this company is going to grow significantly ahead than the industry growth. And they delivered, actually. So I think we believe in execution. And they are on dot when it comes to execution. So, we remain positive on this thing.
Okay. All right. So that's a thumbs up to Coforge and the acquisition, keeping the faith over there. We're out of time, Rajesh. So thank you very much. We'll wind up the conversation for now, but look forward to many more conversations in 2026. Wish you, your team, and everybody at home a very happy new year.
Wishing you the same. Wishing you a great 2026. Thank you.
Thank you so much. All right, with that, let's move on and figure out how this expiry is playing out, because I'm guessing the expiry has had its fair share to play in the fact that we have not suffered at the lows of the session today. We've got Sud joining in. Sud, how's it looking?
So normally we expect a range bound of trade in the year and that's what we are getting. So far Nifty is trying to protect the levels above 25,900 and be in the range of 25,950 to 26,000. So comfortably we are going to expire, basically this series we are going to expire below 26,000 as far as Nifty is concerned. For the second straight day, the reason we are not seeing a bigger fall, mainly because of Nifty Bank and especially the buying that we are seeing in PSU banks. Majority of the PSU banks have been seeing buying for the second straight day, and that's the reason losses in the market are in check. As far as the range is concerned, going forward, even for this next week, the range for Nifty is expected to be from 25,800 to 26,140. That was Friday's intraday high. As far as Nifty Bank is concerned, its range is going to be from 58,800 to 59,200. If Nifty Bank crosses the level of 59,200, it might go and hit even 59,500 and even 60,000. So for Nifty, for next week, I have taken two options data. On the call side, I have taken 26,000. And on the put side, the most active one is 25,900. And the big activities in both these options is indicating you that Nifty is going to remain range bound even going forward, or say next week too. For Nifty Bank, on the call side, the most active option is 59,100, and on the put side, the most active option is 59,000. And for both these options, we are seeing a fall in the premium, but these two are the most active. So support for Nifty 25,870, resistance 26,140. For Nifty Bank, support will be around 58,730, that is 50-day moving average, and resistance will be 59,230, that is 20-day moving average. As far as stocks are concerned, one stock that I'm tracking very closely is Vodafone Idea. Whenever there is a fall from day's high, it sees buying. An all-important cabinet meeting is tomorrow. We'll have to see if the agenda of a relief package is the part of cabinet meeting or not. All the PSU banks are seeing buying. One stock that is the most active or seeing fresh longs is PNB, and amongst fresh shorts, one stock that has fallen for 7th straight day is Dixon Technologies.
All right. Thanks very much for that, Sud. Appreciate it. So that's the F&O stat. I think that Vodafone thing is going to be important. Will it come up or not as the cabinet meeting is the question. Market cap of 1,30,000 crores already at 12 rupees. So, you know, and the government owns a half of it. So 50,000 crores of market cap to defend for the government. But, you know, even if it comes up and what they announce, I mean, what will it do? What will it mean for the stock from here? Is the question. A lot of stuff at the margin. I mean, till it comes out as sentiment-led, you know, rescue package, relief, etc. But once it comes and you put in the numbers, I think then you'll be able to see whether the price where it is and if it's headed high, if it makes sense or not. So that we'll only know if it comes up for cabinet in the cabinet tomorrow, and of course once we know the contours of whatever that package is. Hormuz is now joining us with. You know, what's moving, and outside of the usual, the large caps, etc., he's picked out some interesting moves. Hormuz, over to you.
Well, you know, Indocount Industries is one such name. There's a positive brokerage note that came in on the stock, but over the last couple of hours, the stock has seen some very exaggerated moves on the upside. Now it's up 16% as we speak. Early in the morning when the note was out, the stock was up around 3-4%, and it snapped a 3-day losing streak today, the biggest single day gain in nearly 2 months. Over 1 crore shares have been traded on the stock already and counting. 20-day average is less than a lakh and a half. So there are significant volumes here on Indocount. The stock is above its 100 and 200 DMA, and now it's also moved above its 50 DMA, which was at 291. So it's moved above all of its key moving averages, and it's trimmed its losses for the year down to around 11%. The rally in metal names continues, so can't not talk about that. Hindustan Copper, it's now up for the 8th day running, and 12.5 crore shares have been traded here on Hindustan Copper today. The 20-day average of around 3 crore shares. Same is the case for SAIL and for Nalco, all of them significantly above their 20-day average. The other name on the list today is Orient Technologies. It's a recent listing. It listed last year. It's a news flow driven move, 19% higher on the stock. This after the shareholders approved the issue of bonus shares. The biggest single day gain in 3 months. Volumes are the highest on record. Close to 3 crore shares have been traded today on Orient Technologies. The 20-day average again is less than a lakh and a half. The stock is now above all of its key moving averages as we speak, and from its issue price of around 206 rupees, one of the few IPOs that have done well, the stock is up around 90%. And lastly, Kaplan Point, the top loser on the Nifty 500 today, 6% lower on the stock. It's the fourth straight day of losses, the biggest single day fall and volumes since the last 3 months. Over 4 lakh shares have been traded here on Capital Point. The 20-day average is just around 33,000 shares. So fall on significant volumes here on Capital Point. It's moved below all of its key moving averages. It's down around 30% so far this year, turning out to be the worst calendar year since 2018.
All right, Harmas, thanks very much for that. Interesting list of stocks as always. Nimesh is now joining us. He's been sort of, visiting brokerage offices and meetings. And are people still there, Nimesh? Or absent?
People are still there, Prashant. Yeah. No, people are still there. In fact, today you'll see a very large volume day because of the Nifty as well as other index rebalancing. So dealers are busy rebalancing their portfolio because of the changes in the Nifty, financial Nifty, and other indices as well. So that apart, there is a bit of activity as well in the broader markets as well in today's market. Because of the expiry as well, maybe you're seeing some bit of action in some of those non-FNO stocks as well in today's trade. I guess tomorrow will be quite interesting as well because of the cabinet meet. You rightly spoke about Vodafone Idea, but beyond that, there could be some momentum as far as the rebalancing or for that NAV management as well for the mutual funds for the year. So even from that perspective, some cash stocks may do well in tomorrow's trade. So that's overall feedback. As a sector, metal stands out. We saw a bit of weakness yesterday, but again, there is a sharp pullback in the underlying assets, and hence you've seen a bit of a recovery in the metal names as well. So that as a space has been the sector of this month, and looks like the momentum is clearly there in the metal names.
Okay, yeah, absolutely. Metals is where the momentum has been, and those stocks are still running. What about individual names? Any buzz you picked up today, Nimesh?
Well, so the first look at my list is previous speciality. We've seen multiple block deals in the last 6 months in this particular name, but now I understand there's going to be another large block in preview very soon. And one of the leading domestic mutual fund is an anchor investor for that block. So expect a large block in days to come in previous specialties. That's the first name. The second stock is Taj GVK. There was an official disclosure that there's going to be an off-market transaction between GVK and Taj and the Indian Hotels. So that was done in the morning trade. The entire 26% from Indian Hotels got changed hands with GVK Group. But there was a block as well, and I understand in that particular block, one of the leading domestic AIF was a buyer. So if there's a disclosure, that could be quite interesting in Taj GVK. The third name is Indegene. Stock has been flat, has been consolidating it up in this very narrow range. But I understand at these levels, there is a bit of accumulation happening from some domestic funds, including a family office as well. So a bit of interest from institution is my sense in Indegene at these levels. And the last one is Godavari Power. That's been buzzing in trade today, but largely on back of HNI flows. No specific news flow, but it looks like there is a bit of HNI activity in Godavari Power, and hence a bit of move in that name as well today.
Okay, all right. Nimesh, thank you very much for that. So that's stocks to watch out for on D Street Chatter. We'll take a quick commercial break here. We're going to come back and we'll run you through, BTST trades, short-term trading ideas. 20 minutes to go for market close.
Welcome back. So let's quickly get to the final trades before the day closes out. We're back to Mitesh for that now. Mitesh, what's the final advice? Any more stocks on your radar, and any guidance on the index finally?
I think on these stocks, Oil India and PNB look interesting as a BTST trade. PNB, I would recommend a stop at about 121.6 and target of around 124, 124.5. And Oil India is another one which is reversing after oversold levels. So BTST here with a stop at about 408 for targets of 416, 417. And on the index, Nifty not yet. The good thing is that the back Nifty is kind of held on to this 800 zone and bounced back. But no reversal sign on the bank Nifty yet. So we'll assume that the range trade continues.
Okay. All right, Mitesh, thank you very much for that. Well, we've got Sudeep, of course, with us. Sudeep, good to have you in. Final thoughts and ideas for the new year. So let's start with something on your radar. Any new, investment idea, theme, thesis, stock, company?
Couple of things, Survi. I think one is on the consumer durable side, and I've been positive on this for last few months. Eureka Forbes. I think there has been a change in management recently, and post that, the company has refocused its entire business. They work on three particular products. All three have got humongous growth potential. One is the water purifier. Second is the vacuum cleaner, and third is air freshener. All three have huge potential, and they are market leaders in all three. The margins have been improving, and valuation-wise also, it is still very attractive. That's what I find from a long-term perspective. If you compare with peers in consumer durable industry. The other company, which is from the bombed-out sector of specialty chemicals, I've been liking it again for some time. Privi Specialty. Just now Nimesh was talking about some block deals happening in that space. But this is a company which is into aroma chemicals, and they supply chemicals to about 90 countries across the world. They have a fantastic business in domestic business as well. And they are into niche aroma chemicals, which are used by multiple industries, including FMCG. The potential is huge. And even now, the valuation-wise, it does look attractive.
Privi Specialty. What's it trading at now in terms of multiples, etc.? There's another larger company, right, which is in the same space.
I think between the two companies, yes, you're talking about the company which got listed. I think about 1.5 years back, Prashant. I'm not recollecting the name, but yeah, it's slightly bigger. But these guys are into niche aromas and chemicals, which are very, very, unique, and they have long-term tie-up with multiple, the FMCG and other related food companies. And these tie-ups take a lot of time to work out. So, these are something which are very, very sticky. And the potential, because they have gone into international market, the potential is huge as of now.
I think the other one that you folks are talking about is SH Kelkar.
Yeah,
that's right.
That's the bigger one with a bigger market cap. So Privi, I guess, is in the same space. Interesting niche space. All right, stay on. We'll have more questions for you in just a bit, Sudeep. But right now, let's actually go across to a special segment that Hormaz has prepared for us. And as we're all set to say adieu to 2025, let's try to understand what the year gone by has meant for a once favored theme, the PSUs. Hormaz is putting all the data, the performance and the numbers into perspective.
There was a time when no trading day was complete without talking about PSU names. One day, one theme, stocks going up 5, 8, 10%. They were the talk of the town. Today, they are a forgotten story. As the year draws to a close, the Nifty PSE index has done precious little. Now, compare that to the 4 consecutive years of double-digit returns that the index saw, including that record 80% surge that it had seen in 2023. Now, in this year, BEL was among the standout PSUs with gains of over 35%. On the flip side, now REC, the high flyer of 2023, emerged as the worst performing stock on the PSE index this year, declining by almost a third. We'll delve more into REC in just a bit. But 2025 has also brought a first for the PSU index in 5 years. For the first time since 2020, no stock on the PSE index has doubled in a calendar year. In fact, at 12, the number of stocks with negative returns in a year is also the highest. Now, let's take a look at those high-flying names of 2023 and a better part of 2024, as since then, it's only been a downward slope for these stocks. REC first up. We told you it's been the worst performing stock on the PSU index. The stock is down almost 30% this year. The fall is the worst in a calendar year since 2015. Now, in 2023, the stock had more than tripled in value with gains of over 250%. And from the June 2024 peak, which is close to 650 rupees, the stock has more than halved. This is also the second worst year for REC after 2015. Now, Railway Vikas Nigam is the other such high-flying name. It's down 9%, and this is only courtesy the recent rally that the stock has seen. This is the first time the stock will still be delivering negative returns since its listing back in 2019. That's not the complete story, though. The complete story is from its July 2024 peak, which was also close to 650 rupees, the stock is down almost 40% from those levels. Now, look at the outsized returns of RVNL over the years. It doubled in 2023, and despite making a peak in the mid of 2024, the stock still delivered returns of over 133%. And despite the fall that it has had since then, the stock is still up 15x from its IPO price of 19 rupees. Now, if REC had a poor year, PFC has also had an equally poor year with a drop of around 20%. The stock is set for its worst year since 2015. Now, similar to other PSU peers, the stock also peaked in July 2024 around 580, and from there on, the stock is down almost 40% from those levels. Barring that outsized year in 2023, where along with REC, PFC had also tripled, it has delivered average returns compared to other stocks. But concerns surrounding the sector, growth, all of that has kept a lid on the stock price this year. Now, the recent rally in railway stocks has also trimmed IRFC's losses for the year down to around 10%. One name that was mentioned nearly every single day in 2023 and 2024 was IRFC, when railway stocks were on a tear. But this will still be the first negative year since the stock listed. IRFC also peaked in July of last year, close to 230 rupees, and is down around 40% from those levels as well. Since then, there is still an overhang of the promoter selling because the government still has more than 86% stake in the company. The power grid is down around 15% this year, and you may wonder that it can happen to any stock. Any stock can fall 15%. There is no big deal about it. However, this 16% fall in power grid, or that 15% fall, is the worst it has seen since 2008. Now, the stock peaked in September of last year at around 366 and is down by a third since then. 2023 was the best year. Stock was up almost 50%, and 2008 was the worst year when the stock fell around 42%. Not known for its outsized returns, Power Grid will also see its first negative year after 2019. Now, among these high-flying names, there is a dud as well. That dud is IRCTC. The dud because it is for the third negative year in the last 4 years. Another 10% fall this year. And from its peak, which was around 1150 in May of last year, the stock is down almost 40%, almost back down to its listing price of 644. And since then, there has been a little bit of recovery courtesy of the rally that we have seen recently. Barring that outsized year of 2021 when the stock had almost tripled in value, it has been a slow grind down for this near monopolistic stock. So what next for these names? RVNL does not have much coverage, neither does IRFC, but REC and PFC still remain near consensus buys among the analysts who track them. And while Power Grid and IRCTC could also deliver returns anywhere between 10 to 20% over the next 12 months, according to a consensus estimates of analysts who cover them. PSUs may be down this year, but they are not out for sure, because many big market voices still believe that there are still selective pockets of value within this space. And while the street may not be expecting the 2023-24 era to return anytime soon, shareholders would only hope that this slide is arrested sooner rather than later.
Oh, yes, absolutely. PSUs were. Welcome back. Absolutely flat on the indices. That's what the story has been. Shriram Finance is still holding on to gains of about 2.3%. And then, of course, metals are the other side of it. By the way, I mean, some stocks are really flying around. Look at Aptus Value Housing, some of the smaller names, 5% up. Naveen Fluorine, by the way, 5% higher. Aditya Birla Sun Life AMC, same time yesterday, the stock was up about 5-6%. It's again up 5-6%. Very interesting move on Aditya Birla AMC. Speaking of AMCs, Sudeep, your thoughts? We've got a new one that got listed recently, ICICI Pru. Would you look at buying anything here? If not AMCs, anything else in the capital market space?
Well, I think AMCs definitely are good long-term bets. Of course, the valuation is not very cheap. It is fully valued at this stage. So if somebody is looking at a very long-term perspective, AMCs does make sense. ICICI Pru AMC being the leader in multiple by multiple yardsticks can definitely be picked up whenever there is a dip and accumulated from long-term perspective. But if I have to pick up something from the capital market space, probably I'll go back to the service providers, which is KFin Tech as well as CAMPS. I think both these companies have a fantastic future. They have started foraying into international markets where the margins are significantly higher. Unit economics is much, much better. And, the potential there, particularly the near abroad, which is Southeast Asia, the opportunities are humongous. And both of them are trying to make inroads into that market. Of course, their business in India as well as steady and robust. The valuations aren't cheap, but from a long-term perspective, they do look very good.
By the way, look at some of these banking stocks as well. IOB 7%, Bank of Maharashtra 5%. Interesting moves. Not sure if they're really backed by enough volume. On IOB, actually, the volume is pretty decent. You've got over, over 24 crore shares trading. So IOB is not small in terms of volumes. Bank of Maharashtra is also surging to the highs of the session. Sudeep, quick last question. Financials, they've been the best place in this market up until metals took over and started giving them a competition. But if I were to ask you for one or two financial stocks, lenders, banks or non-banks, give us names that you'll go with.
Definitely PSU Banking Pack. I think valuation comforts is significant there. I'll give you some smaller PSU bank names, and we do like quite a bit. One is Bank of Maharashtra, second is Central Bank of India. Look, they talked about merger consolidation amongst PSU banks may or may not happen, but it doesn't matter. Valuation-wise, they do really look attractive if you compare with similar private sector peers.
Yeah. Canara Bank is a favorite in that sense, with many who are betting on continued momentum as far as this entire space is concerned. GMR Power, I don't know if you, Sudeep, you had any thoughts, any view here. There was some chatter in between. They're going to raise some money, deleverage. I mean, it's the right sector in that sense. Maybe power demand generally has been a little low. Not airports, the power business. At 110. Looked at this one?
We did. In fact, from a long-term perspective, you're absolutely right. Power does look good. And, if they can deleverage the balance sheet by raising money at an appropriate rate, I think the company can do much, much better. I think, the debt in the balance sheet is creating a lot of challenges, and they need to definitely deleverage. If that happens, I think it's a good buy. Overall, we are definitely very positive on power sector from a structural point of view, and all the components of the power sector, whether it's manufacturers, transmission companies, financiers, ancillaries, I think pretty much everywhere from a long-term perspective, we have favorites.
Okay. So those are some more ideas coming in from Sudeep. All right, Sudeep, we'll let you go on that note. Thank you so much for all the advice and all the stock ideas today, and of course through the year. Wish you a very, very happy 26, and we will catch up again soon. All right, with that, let's start winding down. What's actually not been a very bad day for the market, you'd have to say. Maybe it was thanks to that expiry factor because it was buying at lower levels. Perhaps some of the shorts were covering. The index has managed to clock gains of almost 20 to 25 points. On the large cap screen, the leaders include Bajaj Auto, late mover, but moved in style, 2.5% up. Shriram Finance. Metal stocks, obviously never a dull moment. So Hindalco, Tata Steel, even JSW Steel, gains between 1 to 2.5% on some of these names. Axis Bank and SBI did well from the banking pack. Actually, HDFC Bank, for what it's worth, also put on about 0.75%, or rather 0.5%. L&T managed to put on about 0.5% as well. So that's the leaders tally. But on the flip side, Eternal under pressure. Eicher Motors, Tata Consumer, Interglobe Aviation, which has announced a hike for pilots in terms of allowances. That was down about 1% or so. And Bajaj Finance, Nestle, these are some of the other names on the way down. That's the large cap picture. Mid cap, Prashant, the index is not telling us anything. Index is absolutely flat.
Index is absolutely flat and, not nothing at all actually, right? I mean, by the close. But not at the lows as well, essentially. I mean, the mid-cap and small-cap indices slightly, but towards the end, some bit of recovery. There's green on the Nifty, there's green on the mid-cap index, small-cap index, almost green. I know the Nifty Bank was doing pretty well, relatively. through the course of the last few hours anyway. So about 0.5% more. So some push towards right at the fag end of the trade coming through. Well, it's a wrap on this edition of Closing Bell from all of us here. Goodbye. Thank you very much for staying with us. Markets forward will pick up on all the action in just a bit.